Okay. What is good, everyone? What is good? What's going on? Hopefully you guys are having a phenomenal day today. Hopefully you did not get your face ripped off if you traded the job openings or whatever happened over in the yen. Good gracious. GJ moved like 300 pips in like a minute. Crazy. That's almost like a repeat of Brexit. I don't know if you guys were around for Brexit. June 23rd, 2016, I think. But anyway, what up? What's good, Beverly Planet? Nina, one of our newer members, welcome. Naruto, Leon, Sean, Tiago, 2020, Maximiliano, Nikki. What's going on, everyone? We got a lot of people here. We got some likes already going. Man, look at you guys. Look at you guys doing what you're supposed to do without even being reminded, as per usual. Or maybe you guys are just tired of me saying something about the likes. I don't know. Is there any activity in the Discord channel? Because I joined today. Cannot see any new messages or chat. Did you well shit, I gotta go. Let me see. Yeah, there was some activity today in the general chat. Did you verify your Discord? Meaning like you connected your YouTube, and I think you gotta go to the verify channel and then click that check mark, and then you should get access to everything else. The general chat, the charts chat. There's a few testimonials, the announcements, as well as the book recommendations. So you should be able to see all that. If not, then something is wrong. But I think Nina joined today. That's actually what I wanted to get to. I posted this earlier on the community tab, and it tags people's, not their username, but like their actual @. So that's a little ridiculous, but there was quite a few members that joined recently. So we had two or three today. We had a bunch yesterday as well. So things are looking good, man, for the SMS community. Things are looking pretty good, man. You know, 6 months ago, I told you we'd be able to do it. And here we are doing it. I like it. Okay, Nina, maybe that's the missing part then. Maybe that is the missing part. But anyway, I don't know where I can find. Let me take a look. And then we'll get into the rest of today. So yeah, our newest member is Nina, and also who joined today, Antigone. I don't know if I said that correctly. Hatham Montag joined today as well. Craig Reed joined yesterday. Let me see. We had Luca K join 4 days ago. We had Zay Marcel join 8 days ago. I'm a little bit late on that. Sion Wood joined 8 days ago as well. Jose S joined 9 days ago. Ivan V joined 11 days ago. Novation Gamer joined 13 days ago. Yeah, and I can keep going, but we'll be here all day. So welcome, everyone. All right, welcome. Those are, well, at least the tier 3. Okay, there was some tier 1 and tier 2s in there, but Again, we got to upgrade to tier 3 because tier 1 and tier 2 are going away in almost 2 weeks. On the 15th, tier 1 and tier 2 are going away. So you have all of this week and all of next week to make your upgrade, or you'll be stopped out. Essentially, you'll be stopped out. So there's that. So here's the thing about today, dude. I wanted lower pricing, and as soon as we got here, I didn't know there was news at 9. So I didn't check. But we start to trade in here, and I go, okay, I'm gonna wait for a reaction, and then I'll play a retracement. And then I'm doing something earlier. I'm like doing something for social media or something on this other screen, and then all of a sudden I see price out the corner of my eye just rip ass, and I'm like, I had to pause for a second. I went back. I'm like, what's going on? And I just see this big old dump, and I'm like, well, what happened? And that's when I realized there was news, and I went, oh, well, that says it all. That says it all. And I'm not really upset either, but there really wasn't a retracement. Kind of reminds me of yesterday. It's like, okay, there's an initial reaction, but unless you played like that next candle, to me, there wasn't really anything worth taking, in my opinion. And I think it was Andreas yesterday who pointed out the 14,811 level for us. But what we discussed yesterday, we said, what was the short? What was the short? Nothing. But then look at today, right? Look at today. Same thing, mitigation on Nasdaq. I mean, just crispy, clean, phenomenal. Honestly, today would have been one of those days you could have even forgotten about the news, and that still would have been a banger. Still would have been a banger. But look at that. Is Andreas here? Or are they not here? They might not be here. But that's all right. I'll still give them their props though. So, as far as what this afternoon will do, personally, I think today was a classic sell day. Now, this is obviously in hindsight. I mean, it's PM session for the indices, but I'm saying a classic sell day because we talked about, I don't know if it was last week, it might have been the week prior, but we talked about classic buy days, which is essentially the inverse of what happened here. So this is what I mean. I'll give you a quick lesson real fast. When you have a color that you can't see, you got to change the color. When you have consolidation and then the market drops lower and then trades higher, okay, something like that, to me, that's a classic buy day. It's just simple, run on stops, changes, direction or whatever, break a structure, change in state of delivery, whatever. And then, the retracements to follow to trade higher. Okay. So what I'm saying is today's the inverse of that, where instead of consolidating, running lower and then higher, we saw consolidation, a run higher, and then a move lower. Okay. Now, don't be fooled. The drawing is easy. The drawing is easy. It's putting the details on it that's more difficult. Okay? Because this consolidation really isn't all that sexy, right? It generally kind of slops a little bit lower, but then here's your manipulation, retracement, dump. Okay, so again, it looks a little bit not as picture perfect, but do you guys still see what I'm saying? There's a classic sell day down to these lows that Andreas outlined for us yesterday. So, good job. If you want to, you can also include the ranges, premium discount. Okay, now there's a couple things you can do here. You could use the lows, okay, and this high, or the long-term low of Wednesday the 27th. So either way, this mitigation and this imbalance here, either way, will put you at a premium. Will still put you at a premium. Does that make sense? The lows up to that high. There's your 50%. Where's this imbalance? In the upper range. That would be a premium. Okay. And then obviously if we extended the range lower, Amazon must be here. I am waiting on a package actually. But they usually arrive late. They usually don't arrive at 12. There's your larger time frame premium. Okay. So either way. Either way. Was good, Stephanie? Oh, that's right. The member goal, it does say 146, but it is more than that because it hasn't updated. You know how YouTube is. It takes a while. But anyway, premium imbalance, premium mitigation, and then discount liquidity. Okay. And same thing for ES, slightly different. You had yesterday's low. When we were looking for short-term longs yesterday, right? Very small time frame. I mean, nothing crazy. In the afternoon, like once we hopped off the session, once we got off here, we ended up leaving lows. So it's like, okay, well, that may be a target for today, but this run here, it counts, but to me, it doesn't. Okay. What do I mean by that? Yes, it meets the 42.95.5 level, but look at what time it meets that. We'll look at it in a second, Tiago. What time does it meet that? Before the stock exchange. So if we go to regular trading hours, it ain't going to be there. We opened higher at 8:30. So the lows might have been swept on the future side, but not for the open market, like stock exchange rather. So we gap down. Traders probably long to try and fill the gap. Market says, fuck that. We go lower. Okay. And that's what that looks like. So you see a gap in the stock exchange hours, but you see a mitigation and an imbalance on the future side. And this is why for a while I've been an advocate for looking at both. That's how you get more information. It was a few months ago, it was earlier this year, we talked about the seven assets that there is to look at when trading the indices. Do you guys remember what they are? You guys remember what the seven assets are? While I take a quick gander at what's going on. Honestly, this PM session looks kind of whack. Yeah, today is kind of. This is why I said it's a classic sell day. So all the movement was in the morning, AM session, whatever, and for the PM session, there's not really anything for me to target that's high probability, just like yesterday. I mean, yeah, we could kind of squeeze a little bit of juice, but that's not always high probability trading. That's not always like home run trading when you try to force it. It's a huge down day and you're trying to long. It's just not the most efficient thing you could do. Dollar futures and ETFs. Index ETFs, index futures, and dollar. Nasdaq, Dow, SPOOs, micros, and E-mini. Index ETFs for Dow, Nasdaq, and SPOOs. And of course the dollar index, right? I mean, it's on the screen. Nasdaq futures, S&P futures, Dow futures, and then Nasdaq ETF, S&P ETF, Dow Jones ETF, dollar index. Make sense? So I'm assuming lower pricing. I just do not currently see a reason to long. And this doesn't seem like a solid low. It just doesn't seem solid. You know, kind of like some of my friends, my old friends, they just weren't solid, you know? And sometimes you see that in the lows as well. It's just not solid. So we'll have to see. Why are the first two tiers being removed? Great question. So, long story short, I'll give you the brief answer. When I started memberships, they were not for creating a large community. They were just for the sniper, the emojis, you know, just to have some fun with it. But the douchebags I used to fucking be, you know, I used to stream for a company, right? And they thought I was trying to like do dual mentorship where I'm like teaching with like for them and then like I'm teaching on YouTube as well. So, you know, that's why things got fucking shaky back in January. And the purpose was not for building a community for that. So I made tier 3 for that purpose, for Discord and like to get everything basically. So at the time, I started doing market reviews so you guys would get some value for a membership, right? If you're going to pay money for something, you need to get value, right? So just on the spot, I was like, you know what? Tier 1, I'll do a market review every Tuesday. Tier 2, I'll do every Tuesday and Thursday. So they'll get twice as much because they pay twice as much, right? So at the time, that's what we did, okay? But the goal has always been community. I want to build a community. So I eventually launched the tier 3 for, again, access to everything, plus the Discord where we could all, you know, have a central place to all meet each other, ask questions, all that shit. So we launched tier 3 and it's been around for a couple months now, but I've noticed there were more tier 2 members than tier 3. So I said, you know what? We're just gonna drop it altogether. We're just gonna drop tier 1, drop tier 2, and just have one membership. Plus, there's not gonna be any confusion, and I'll be frank with you, I really don't fucking like explaining myself over and over again, outside of trading, of course. So the fact that I have to keep, you know, answering, what's the difference between this and that? You know, which one should I get? All that. Okay. I'm not annoyed at that, but it's just easier to run things when you can streamline like the process. So to avoid any confusion, to avoid any kind of complexities and me spending more time on that. Again, I'd rather just cut it down to one membership. So hopefully that answers your question. What's good, Andres? Man, you missed it. You missed it, man. I was trying to give you some props for yesterday. I was trying to give you props for the 14,800 level that you called out for the stream yesterday. Right? Beautiful mitigation from this morning, even though there was news. So I wouldn't trade going into news, okay? But just for studying purposes and referencing what we discussed yesterday, that's solid. Because remember, we outlined some things yesterday, and we went, well, what's the short? What's the short? And we kind of just looked at each other like, well, I don't know. I don't really see a short. Right. So you go, okay, well, if there's no short, then we wait for the next day. What happens today? Classic sell day. Consolidation. We run higher, clear all the consolidation, rip ass, retracement, mitigation, imbalance. News sent us lower, down to the lows. It doesn't get any more crispier or more beautifuler than that, if that's a word. More beautifuler than that. Okay. So I think it's solid. I'm trying to figure out what we're going to do here in the afternoon. I don't know, but I think we're going to trade lower. But it's hard to justify shorts after a 57-point move lower. So there's that. But anyway, what else we got on for today? We talked about the new members in here. We talked about the memberships and that you have until the 15th to upgrade to tier 3, which is again going to be changed to simply SMS member, right? Smart Money Stoic member. The market review I will put out tonight, but that won't be until after obviously today's stock exchange closes, in case there's anything that we may be able to watch or stalk like we did yesterday and Friday. And then the last thing I have for you is just the Q4 video. The Q4 video we did. You guys remember that? What does the 4 stand for? I was going to do Q, but I decided not to. What does FOUR stand for, the acronym that I made the other day? What does it mean? What does it mean? I feel lazy today. Only because it's raining outside. But you know what? I won't be lazy today. I won't be. Yeah, we'll watch this for now. Fearless, organized, under control, and relentless. Yes. That is what that means. That is what that means. You know what? We'll come back to the indices. Did anybody trade the yen today? Anything yen related? Did you guys see this, bro? Look at this 1 minute candle. Y'all see that? From 180.85 down to 178.07. 277 pips plus spread. They're looking for a setup on there for weeks. You want to know what's crazy? I did a video on interest rate differentials for DJ years ago. I think that was either here or back in here. I can't remember. That shit was so long ago. But I saw some tweets about it and I had no idea like anything happened over there. And then I looked at it and I went, oh my heavens. Someone got their accounts blown today. Big yikes. And I think it was UJ. Similar story. So it must have been something with the yen. I don't know. But I tell you what, it looks pretty nasty. Pretty nasty. In the spirit of being organized, I've been cleaning up my charts for the past few hours. We'll be restructuring my trading binder today as well. Long overdue. Very nice. Very nice. And my binder is got my binder too, man. Got it right here. 2023 futures trading. Time price context. Trading view can't delete that one, huh? Can't delete that. Looks like a Bitcoin chart after a massive dump and flatline. Bank of Japan rug. Yeah. I'm guessing. I really don't know. Because I thought there was just news for the US. I had no idea. But I'm not surprised. Shit like this happens from time to time. And I would never want to be a part of that. I think Brexit was enough for me. I didn't even make all that much then. But I'll probably never catch a bigger amount of pips in a shorter amount of time than that. That'll probably never happen again. But that's okay. It's not about that. Oh, Nasdaq sliding lower as well. Not equal highs here, but the S&P had highs here, ran higher, breaks down, rallies. Well, it's not really a rally, but it does retrace and then has dumped. So you see that there. Different lows on Dow. Again, just doesn't look like a low that's been set. You know what I mean? It just doesn't look like it's been set. Nasdaq 5-minute imbalance. I don't know. Not really. It doesn't look that way. Get a lot of delivery here. So it doesn't look like it. And this is why I've been going down to the 1 minute, because look at the 5 minute. What am I supposed to do with this? 14,758 on the 5 minute. What are you talking about up here? Like up there? No. I mean, if that is what you're talking about, I could see that, but that's not. I wouldn't be worried about that. It's already left this area. And just, it's too deep of a retracement. This man entered by 6 points on Nasdaq today. Wanted to short the 5 minute imbalance at 14,980. 14,980. Oh, you were looking at this? Hmm. Nope. Nope, nope, nope. Mitigation was respected. Didn't need to get up there. Now, obviously, this is hindsight, but do you now see why the mitigation model requires for an overlap? This is why. This is why. It's just confluence is better. Confluence is key. See that? See that overlap of the 15 minute? It didn't need to get to the 5 minute up there. It was too far gone. Too far gone. But I tell you what, I would note that though. Note that. For next time that happens. There's your lows on Nasdaq. It's just kind of slow. But I would tell you this though. I do want to see if there is a difference. Because the S&P doesn't have to take these. But if Nasdaq does and S&P doesn't, that could mean something. But we won't know. We need to give it more time. More time. Why are you using that candle for your mitigation and not the last up candle before the impulse down? Because that is not what a mitigation is. There is a striking difference between the two. The man, I'll try to explain it to you this way. The context is different. I mean, literally everything about it is different. So if we take a look at the S&P here, okay? When you look at a chart and you look at price, okay? I don't know what it is that you look at. I don't know what you look for. I do remember a time when I used to look at a chart and go, I don't know what the fuck is happening. I opened my first brokerage account 10 years ago this month. I didn't start trading until March or April of 2014. So I'm almost 10 years trading, but I definitely have had an account for a while. So I know what I'm looking for now, but here's the thing. There is a very, very huge difference between what you're talking about, like the last up candle or a mitigation. Okay. Very, very big difference. For example, this right here. Okay. You take your 12 p.m. candle. This is Central Time, by the way. This is the candle that took some highs, right? It didn't really run anything over here on the 5 minute. This looks like shit. But it takes liquidity here and then price trades lower. Okay. Now this candle here, the opening price, not the low, not the high, not the close, the opening price is here. Okay. 42.72. All right, right there. Boom. Right there. See that? So when price has shifted from bullish to bearish, up candles will be respected, meaning price will not push past them. So you see that here, right? Because price trades lower, hits it, trades lower, hits it, trades lower, hits it, dumps. Okay? I don't really like using the word resistance, but that's essentially what's happening. Price is resisting to go higher, trades lower. Okay? So that's what that is. A mitigation is different. I don't look at it this way in this particular scenario, but if price left an imbalance going lower, then my attention would go to this down candle here. Okay. And then what I would expect is like with what we did on Friday, where price reaches into it and then trades in the opposite direction. Now, Friday, we were looking for longs on the 2-minute. So this is an inverse, but I'm saying that's what a mitigation is. And the reason that it's called that is because that's the context behind it. If you're long and then you held on for too long, you overstayed your welcome, as I usually explain it that way. You've overstayed your welcome. The last push higher, okay, into this down candle, preferably an imbalance of some sort, that's your chance to get out before the market rips lower. So it's an opportunity for anyone who is long to mitigate that position. And they can either do one of two things or both. They can get out of their longs, or like I do, is short. If the market happens to be bearish. Like if you're bearish and you want to short, this can be seen. Okay? So there's a very huge difference. Does that make sense? Sometimes I feel like I don't explain it the way that I want to. But up candles are respected in bearish markets, but a mitigation is totally different. Okay? But drop a 1 in the chat if that makes sense. Or drop a 0 if it doesn't make sense. Let's get some binary code up in here. A 1 if it makes sense, or a 0 if it doesn't make sense. Okay. So you're saying it makes sense. All right, great. So I'm not saying that's what I think is going to happen now. I don't know. The reason I'm saying that is because, number one, there's no imbalance here on the 5-minute. And the 1-minute doesn't have that either. The 1-minute also has some highs here. So we could reach for that. And right now we're in between. We're in between these highs and we're in between these lows. What I said earlier, the Nasdaq has made a lower low. We've done that. The Dow is usually in its own world, and it kind of is right now. Well, we have to get this a little bit more information to work with. Before we can work with it. And same thing with the S&P, because here's the thing. I don't know, okay? I don't know if Nasdaq ends up running the lows, S&P doesn't, and then S&P ends up being accumulated for longs to go higher. And that would indicate that there's manipulation on Nasdaq. And if that's the case, then we can be bullish after that. But I don't see that yet. I don't see that yet. So right now, if I had to pick a direction, I would pick short. I would pick short. If I am wrong in that sense and we leave these lows open and we trade higher from here, then that would probably mean a bullish rest of the afternoon. That's what I'm thinking. That's my thought process. Okay. So with that, when you can justify, this is a very, very important lesson. Okay. If I cannot teach you to win more, I can at least teach you to lose less. Okay. And don't let that go over your head. Okay. If I can't get you to win more, I can at least teach you to lose less often. All right. And with that, okay, this right here, price is in a condition that I believe the conditions are low probability because we are in between two areas of liquidity. And now granted, this is super small time frame, I understand. But in the range, we're below halfway, yes, but if you look at it, well, we could take the highs or we could take the lows. So for me, price is 50-50, black or red. Okay? Now, if you want to go to Vegas and if you want to put your money on black or red, that's fine. I ain't going to knock you for it. I've been to the casino a couple of times in my life. It's not very fun to me because you get your fucking face ripped off in like 30 minutes. Okay? But I don't got nothing against that. I mean, you know the odds are stacked against you. In trading, however, I don't want 50-50 odds. If I'm going to put money on the table, okay, especially real fucking money, I need something that is higher probability. Meaning, like, for example, why am I bearish? Because we had highs here that were swept. We've dumped lower, retracement, and now it is trading lower. So it looks like it wants to take these lows. That to me is more of a one-sided market when it's up here, of course. Now that we're in the middle, it's not. But if you had an entry up here, then I mean it's down like 6 points. It's like $300 a contract or so. Like that's okay. But we're talking about entry specifically. From here, this is ass. This is trash. This would be a trash entry, in my opinion, if we were trying to short this. Okay? And that's one thing, too. If I am short anywhere in here, I would be at the same time monitoring the other indices going, all right, well, Nasdaq hit the lows. S&P hasn't done that yet. Is it going to or not? And that's what I would be a little bit concerned with. Okay? This is where the patience comes in. Because you got to wait. All right? But in short, if we were to wrap all this up in one sentence, if you can justify both sides of the market, that is low probability conditions. All right? So that's not complex. That's not profound. It's not complicated. There's no math formulas. E equals MC squared. Okay? None of that. It's simple. If you can justify a long and a short, low probability. All right? And that's where I think price is at in here. But I still favor downside. Again, if I had to pick, if I had to favor downside. Dow sliding into home base of the lows. She looks that way. Or it looks that way. And there's the lows on Dow. And we're only 3 points away on ES. So it's interesting, right? It's very, very interesting. Nasdaq went there first and is continuing lower. Dow second. And the S&P is like, I'm gonna do what I want. I'm gonna do what I want. But yeah, so again, sometimes we got to wait for more information. And right now, that's what I'm waiting for. So let's say over the next few minutes, price trades below 42.57. Okay. Well, what do we do then? Well, then it becomes, how do we react from here? Do we continue lower? Or do we reverse and go higher? I have no fucking idea. I'm not trying to predict that far into the future, okay? That's why we got to wait. If we continue on with the idea of up candles being respected, okay? We come back to what I was saying earlier. This up candle here, respected. This up candle here, respected. Okay? Watch this. See this up candle right here at 1220? The open is 42.69. Okay? What is the high of this candle right here? Look at these numbers up here. I think you guys can see it. Can you? Yep. Look at, there's an H right here. Okay, watch this number right here. The open, 4269. When I highlight this candle, the high is 4269. See that? That's pretty cool, isn't it? This up candle is being respected for shorts. We have an up candle here, but we haven't done anything yet. We haven't came down for these lows, and we haven't traded higher either. I don't think it would need to. I think it is just gonna rip down below 42.57. So we'll see. Is who was that earlier? Was that Nina? Who was that? Yeah, Nina. Are you still here? Did you get in the Discord? Did you verify yet? I gotta make a video on that. I got to make a video on it. It worked? Okay, great. Appreciate it. Why isn't it available to see the data of the futures on the daily chart? I only can see it for 1 or 2 months. So what you're going to need to do is go to the front contract, like it's a rolling contract. So instead of ESZ, you would look at ES1. It's not a problem, Planet. It's not a problem. Futures have expiries. That's why it doesn't, that's why you can't see it. Because see how it's all like jacked up like that? Is because there's no volume there. There's no volume because traders are not trading that contract until later. So now that we have volume and open interest, now we're here. But the like ES1 it like constantly rolls it over. So you'll get data from then, but it won't be data for ESZ. At a certain point, it will change and you'll be looking at ESU or ES, whatever the symbol is that you're looking at for that quarter of the year. Make sense? Or you can just look at SPY if you're trying to look at the daily. That would probably work too. Jada, what do you mean? Why is the price action so different? I'm not understanding the question. My friends, I'm not understanding the question. On the weekly on ES1, it looks like a lot different than ESZ. Right. Because it's not the same data. It's not the same. If you, Jada, how old are you? How old are you, Jada? $40? Okay. Well, there's 4257. Haha. Pretty cool. All right, Jada, you're 40. Okay. So if you took a selfie at 20 years old and 40 years old, would you look different? It's still you. You're still Jada. But would you look different 20 years apart? Of course you would. Because it's different. You grow and you change. S&P expires. Okay? Well, people expire too, but that's probably not a good analogy. ESZ, right? We're looking at it and we've got all this data back here. But if we go to I think it's ES1 exclamation. Okay. Then you get data, right? You see this down here? Contract switch from ESZ 2022 to contract ESH 2023. So when you look at right now, we are on ESZ. But if we look at this is no longer ESZ. That is ESM 2023 back here. So it's different. They're basically putting the contracts together. They're stringing them together like a chain. They're going, here's this contract. Okay. And then from there to there is a different one. And then here to here, roughly, is a different one. Okay? So hopefully that makes sense. So they're just stringing them together. That's all they're doing. So like I don't watch ES1. I watch ESZ. Because that's the contract month that we're at. It's where the volume and open interest is. So, anyways, how did we get here? Personally, I don't like how we got here. I think this was a little bit sloppy, in my opinion, other than up here at 12:15, 12:20. But I would have wanted an imbalance, and we didn't get one. So I'm not really all that upset about it, I guess. But anyways, so let me ask you this before you guys hop off. Do you see how we did that? Like, even if we didn't trade it, even if we didn't make money, even if, you know, whatever scenario it is for you, we looked for lower pricing. We got lower pricing. How do you get to that? And I've tried to do my best to explain it to you. Like I said earlier, right? When you look at a chart, what do you look at? Highs and lows or whatever. Okay, guys, we didn't do any top-down analysis. We didn't do any dollar index related intermarket analysis. We didn't do any of that. All we looked at was price delivery. That's it. That is it, my friends. Just price delivery and liquidity. That's it. The only two things we looked at. Liquidity and price delivery. Where's the liquidity? Here and here. Okay, well, it was taken on the upside and then dumps lower. So what's the next side? Lower. Where did price go? Lower. Wow. E equals MC squared. Aerodynamics. Space engineering. Come on, bro. No. Simple price delivery. Liquidity. Well, this, we more so looked at like order flow, but it's price delivery. Order flow was bearish. I said this probably isn't going to be our low. It doesn't look solid. Just like my old friends. It doesn't look solid. Did it hold up? No. It got wrecked. Simple. Price is not hard. Now, what you're going to have to overcome at a certain point is, let's assume for a second, I would hope so. I can't promise this though, but assume for a second that you get better at price action. You go, okay, John, I've been watching you every day. I've been watching all your market reviews. I read your book. I've asked all the questions. I'm in the Discord. I read all the book recommendations. Okay. Now I've got an understanding of price. So I can see the liquidity. I used to be the liquidity, but now I can see the liquidity, right? Okay. So now I kind of get where price is going to go. I'm getting better at that. I may not hit every day. Sometimes I get it wrong, but I'm starting to get it right more times than wrong. So I'm on a good track. All right. That's a good position to be in. But here's the problem. Here's where you're going to run into a roadblock. You're going to go, okay, I've seen this before. I'm a little bit late. And I just know price is going to trade down here for XYZ reasons. So I'm just going to get in late because I don't want to miss the move. I don't want to miss it. I know it's going to go lower. I don't want to miss it. I don't want to miss it. And then what's going to happen is inevitably, if you happen to get it wrong, which eventually you will, you're going to take an easy loss. And that's going to be frustrating. So you need trigger discipline. You need to be able to say, you know what? I think it's going to go lower. I'm pretty convinced it'll go lower, but I don't really see an entry, so I'm just going to leave it alone. And then you just watch it trade lower without you. You have to be comfortable with that. And it's hard because you want to make money. When I said a minute ago that it was probably getting ready to trade down here and we watched it do that, I don't think you realize. Okay? I don't think you realize. 42.60 to 42.57. Man, John, that's only 3 points. That doesn't look like a lot. That doesn't look like a lot at all. That's $150 a contract. That's only 100. That right there is $150. So, you know, that's not bad. Now, I straight up did not do that because I wouldn't want to enter this late, but I'm just saying, you don't need big moves. You just need the right moves. Where's Willow? I don't think Willow's here today. Where's Willow at? Are you here? He might be tending to baby pips if he's not here, but that's okay. You remember a few weeks ago, we talked about a little bit about psychology, and I said, bro, you don't need more psychological training. You just need to take better fucking trades. Right? Now, don't get me wrong. I love Mark Douglas. That's my guy. Rest in peace. He changed the game for me. I won't deny it. I never will. However, I think some people, I'm not saying this was Mark or Paula Webb. I'm not saying that. But what I'm saying is I think some people in today's world overemphasize trading psychology. I think they overemphasize it. However, if you can get in alignment with order flow, you won't take drawdown all that much if you get it right. So if you get it in alignment with order flow, if a trade is screaming in your direction, what psychological battles are you facing? You're not in drawdown. Your account's green. What are you scared of? What account are you going to blow if the market goes your direction? So don't underestimate technical analysis. Don't underestimate the technical side of trading. You get into some good trades with almost no drawdown. What psychological problems are you going to face? That's an honest question. So it helps the psychology side to take good trades, to get in alignment with order flow. What did we talk about? Up candles being respected, right? Let's look at we didn't look at a 2-minute this whole time. We talked about order flow, okay? Up candles being respected in bearish markets. So let's take a look. You see that here? 2 up candles here. You see that? There's an up candle here, but price never came back into it. So in hindsight, because I'm assuming we probably could have traded this, I didn't, but what were the opportunities here? Right there and right there. Look at this fractal. Look at this fractal. Consolidation. Run higher, retracement slower. Oh, wait a minute. Wait a minute, John. I've seen that before. Consolidation, run higher, and then retracement. You drew that earlier. You drew that earlier, you dog. The classic sell day. Yeah. But that's not just seen on a 15-minute. Let's go back. Kind of shitty consolidation, run higher, dumps lower. You see that on a 15-minute, and then you see it. It looks kind of shitty because I got drawings all over the place, so I'm just trying to make my point. You see the same shit on 1-minute time frame too, right? Oh, that's what you guys mean when you say price is fractal. Yeah. Yeah. So, mind you, these would have been scalps, of course. And I don't usually like to trade that late into the day. Like I said, price has already dumped like 60 points. So I'm a little bit hesitant, okay? Now, if I shorted earlier this morning and I'm up 50, 60 points, oh yeah, I'll put the risk on. But if I haven't traded today where the market's down, I mean, look at it. 2% on Nasdaq, 1.6% on S&P, 1.5% on Dow. I think it is a little bit late in the day. So I may not risk, any of these personally. I might wait for a better day. But do you guys understand what we just did here? It's kind of a small consolidation, but it's still a consolidation nonetheless. And it printed the same way it printed on the 15-minute, just slightly different. Slightly different, but ultimately the same. Just like Jada, when you took a selfie at 20 and you took a selfie at 40, you're still Jada. It's still you. Just slightly different. But it's the same thing. Trader Dad still looks. Trader Dad, how old are you? You're a dad, so I'm assuming you're older than most of us. Lewis caught Nasdaq. What'd you do on Nasdaq? Oh man, that thing is still fucking lower. Excuse my language. That thing is dirty. That thing is dirty. But delivering pretty well to the downside. 30, Trader Dad is 38. Oh, that's not bad. That's not bad. I'll be 30 in less than 2 months. Or just over 2 months. I'll be 30. I will be leaving my 20s. The roaring 20s. I will be entering the 30s. So wish me luck. Wish me, I don't know how much longer my lower back's gonna be intact, man. Might have to be a robot here pretty soon. I might need someone to 3D print me a lower back, you know? You know what I mean? I need it. But anyway, I think that's going to conclude it for today. You know, if there's one point I want to make, I made a lot of points today, but if there is one point I want to make, it is this. You can watch price go your direction and not take a trade. If it doesn't fit your risk parameters, if you're not willing to risk it, you don't need to trade it. You don't need to trade it. Sometimes the 1 minute looks like trash, right? Sometimes it might look kind of janky. There's always a 2 minute time frame. Lack of wick inside an up candle right there. You know, doesn't look janky, but it doesn't look clean either. And that 5 minute looks all right. But sometimes you can tell price like where it's going to go, but not take a trade. And you need trigger discipline. It's okay. How many days in a row have we like looked at something before it happened? How many weeks have gone by where we're able to look at stuff all the time? It's called repetition. It's called experience. And the markets repeat themselves. It's that simple. Oh, Trillion walked the dog. And price came back and levels got smacked. That's good. What kind of dog you got, Trillionaire? What kind of dog you got? I'm curious. Not that I know all the types of dogs, but now I want to know. Because you said something. Appreciate that, Nikki. And Andreas and Lewis. Thank you. Yeah, we're pretty much at the end, bro. I mean, they all made lower lows, so I don't know what we're gonna do. I think what I'm gonna do is probably go read a book because I don't see any reason to try and take any longs here. I don't really see a reason. I don't see a reason. We'll take one quick look at silver and gold. Real quick, real briefly. Silver, slightly up day. Slightly. We did trade at a lower end of this imbalance here. I don't know if that's going to hold or not, which does come back into this down candle here. So, you know, it's hard to say. But I told you yesterday, I did buy some silver coins. But I am not trying to pick a bottom. Okay? Because I'll buy more if it goes lower. I don't care. I don't care. White and black. Oh, you know what? Oh, never mind. I was gonna say my grandma growing up had a schnauzer. That dog wasn't bad. It wasn't bad. She really didn't bark all that often. You know, like she wouldn't bark in the middle of the fucking night, type shit. I like a dog like that. If you got a dog and that dog don't bark, all right, cool with me. That's fine. That's fine. But you got a dog that barks a lot? No. No, no. No, no, no. Can't do it. Can't do it. 1, 2, 3, 4, 5, 6, possibly 7. Possibly 7 days lower consecutively for gold. But it's only down 0.2%. I don't know. I don't know what's going to happen. But either way, that's gonna be a wrap for today. All right. Again, you'll get the market review in a few hours. I'll go over briefly what we did today and maybe some opportunities and whatever else we can throw in there. But quick reminder, if you are a tier 1 or a tier 2, you got to upgrade. You got to upgrade beginning the 15th. Well, the 16th is like the first full day, but that 15th, that Sunday night, all tier 1 and all tier 2 will be canceled. Okay, they will be canceled. And yeah, tier 3 is going to be the last remaining membership. And then moving forward, that's all that's going to be available. All right. So we can get more people into the Discord, more people in the community, and hopefully more people funded as well. We shall see. No promises, but we shall see. If you had fun today, and if you haven't already liked the stream, drop a like on it. I would greatly appreciate that. Y'all be good. I will see you tomorrow on Wednesday, same time, same place right here, only on YouTube.